Today we're going to be looking at risk management, and we're going to look at some tools on risk management. So today I just have the three most critical questions that people are asking. We're gonna go beyond these questions. I will show you some few things on the charts. So, but the first question that I have is, what lot size should I use? Okay. So this question it seems as if it's assuming that there is a standard lot size, okay, for each and every account, or I don't know what parameters people will be using for that one. So this question, by the way, it assumes as if there is a standard lot size, okay? So, but the reality is different pairs have different pip value, okay? And different trades will have different stop loss, okay? So it simply means the number of pips that you're gonna risk per trade, it's gonna be different, okay? Because there are a lot of circumstances. So for an example, let's look at here. If you look at here, we have this fair value gap here. So let's take, you make your entry here, okay? And then you put your stop loss here, okay? And then also here, we have a fair value gap here. Let's say you make your entry at this fair value gap, and then you put your stop loss here. So if you look here, obviously you can see that the number of pips that you're gonna risk, it's not the same, okay? So if the number of pips that you are risking here, obviously it will affect your lot size, okay? So let's take here, I'm just making an example. Let's take here, you are risking 10 pips, okay? And then you find that here you are risking 20 pips, okay? So obviously it simply means here, let's take you use 0.1 lot size, okay? But when it gets to this one here, obviously your lot size needs to reduce at least 0.05 that you're going to be using, okay? So, and then you are within your risk parameters, okay? So there are a lot of factors when it comes to determining your lot size. So we're going to look at the best way to do it, okay? And also we have different pip values, okay? So different pairs have different pip values. So that means now what you're going to have, your lot size will either increase or decrease based on the pairs that you are trading, okay? So Euro USD, for an example, and the pound US dollar, for an example, they do not have the same pip value. Even if you go to gold and compare it with the pound US dollar, you can see that they don't have the same pip value. So the question on what lot size should I use, it's a very, very critical question, but it won't get you anywhere, because it seems as if that question is assuming that there is a standard lot size, while there are a lot of circumstances that gets to determine your lot size. Your lot size is something that you're going to be adjusting over time, okay? So you're going to adjust your lot size, different pairs and different trades. There are a lot of circumstances around that one, okay? So how many pips should I risk? Okay, so I believe this one is the same thing. I believe this one is the same thing as the first one, because when you look at how many pips should I use, it seems as if the person is assuming that every time on a trade I should risk 10 pips, okay, of which that's not reality. You have seen it here. If someone enters here and somebody enters here, they won't risk the same number of pips, okay? Because the factors around this trade and the factors around this trade are not the same, okay? So that question, it's simply assuming as if there is a standard number of pips that you should risk, okay? And that's not true. Okay, even if it was true, let's say in a sense, okay? But if you look at this one now, remember different pairs have different pip value, okay? So there is no way that you will risk 10 pips on pound US dollar and then 10 pips on Euro USD and expect to be risking the same amount of money, okay? So I'm getting somewhere with this thing. So now let's go to the third question. What should my stop loss be? Well, when it comes to the stop loss, what I will say is just forget about pips. and focus on the money, because different pairs have different pip value. Hence, that's why we have tools like pip value calculator, okay? Because the pip values are not the same, okay? So here is the best way I believe we should approach risk management, okay? So to address this question effectively, I think you should consider a percentage-based approach relative to your account size, okay? So it factor in your account size, okay? And then what you should be aiming for is to risk at least 1 to 3% of your account size, okay? I recommend 1%, okay? If you go above, I recommend it 2%, okay? So anything above 3%, it's a little bit too much, okay? So this is what you need to keep in mind. So for an instance, if your account is 10,000 US dollar, let's say you risk 1%, okay? That 1% will translate into 100 US dollar per trade, okay? So this means your stop loss must not exceed 100 US dollar per trade, okay? It must not exceed 100 US dollar per trade, your stop loss, okay? Because you have already identified that you want to risk 1% per trade. And then if you look at 1% of 10,000 US dollar, it's gonna be 100 US dollar. So it simply means your stop loss now needs to be 100 US dollar per trade. It does not need to go above that, okay? So now this means you need to adjust your lot size, okay? So let's take you get into a trade, and that trade that you get into, it allows you to risk 10 pips, okay? So if that trade allows you to risk 10 pips, and then there is another trade that allows you to risk 20 pips, and remember, you keep in mind that you don't exceed 100 US dollar, okay? So where you are risking 10 pips, let's take your lot size that you were using was 0, 1, okay? So let's take the lot size was 0, 1. So when you come to this one where you are risking 20 pips, on that trade where you are risking 20 pips, obviously your lot size needs to change now and become half of what you were risking before, so that you can factor in this here, this 100 US dollar, okay? So sometimes you can even find that you don't need to change anything because the pip value is different on those pips, okay? So here you find maybe you are risking 10 pips, but because the pip value here is high, it equivalents to your 100 USD, and then you go to another pair, you risk 20 pips, okay? On risking that 20 pips on that pair, because the pip value is too low, you find that you are still risking 100 US dollar, okay? So there are a lot of factors that are in play that we need to consider whenever we get to talk about risk management. So I'm gonna show you something on MT4, how we can just play around this thing, and then after that I'm gonna show you on the position size calculator tools, and then we get to play around those tools, and then we see how we can make the best out of risk management. So now let's get into MetaTrader 4. Okay, this is MT4. So here is a simple way, okay, if you don't have all these tools and everything. So here is a simple way to help you plan ahead, okay? So let's take you doing your analysis, or you did your analysis, and you can see here we have a shift in market structure, okay, and then we have a fair value gap here. So let's take you did your analysis and you are waiting for price to get to this level here, and this is the level that you are targeting here, okay? So what you're gonna do, okay, so you do this prior to your analysis, okay, not after price has gotten to this level here, because what we want to do, we want to determine the right lot size, okay, because your stop loss, it's gonna be above this high here, okay? So you want to know the best lot size, okay, and how much will you be risking, okay. So let's come here and put a sell limit, okay. So let's come here and put a sell limit at this level here. So when we put a sell limit at this level, let me just modify the sell limit and let's just put something. Okay, so this is the level that you are targeting, and then this is your, oh no. Okay guys, let me try to modify again so that I can try to shift the stop loss away a little. So you can see, let's say your stop loss is here, okay. So you are looking at this, let me adjust again. So basically this is how I used to do my projection. Even now I do it, like I make the analysis ahead, then I look at where price is most likely to go, then I place a limit, just playing around, okay. So you can see here, this is 43 US dollar that we are risking, okay. For price to get to this level, how much are we targeting? We are targeting 200 US dollar, okay. So let's take, based on that example, that you are risking what? You are risking 100 US dollar, okay. So now you can see this is 43 US dollar. So now what you can do, you can add another position here, okay. You can add another position here, or what you can do, you can just increase the lot size, because remember, you are just doing your projection here, okay. So let's take, we can now come again and say sell limit, and then we modify that sell limit. Okay, so these are take profit here. So let's take maybe the second take profit, maybe you put it somewhere here, and then you put your stop loss above here, okay. So I believe it's gonna be 48, 43. So you're just gonna do the math, okay. So as long it doesn't get to 50, I know it doesn't exceed 100 US dollar, okay. So combining both, so basically this is how I get to do my projection. I still do it even these days, okay. Even this day, I mean, I still do it like this whenever I get to do my analysis and I have the time to actually plan ahead and stuff like that. So I do my projection like this. So now we're gonna go to the tools that we can use to also do the same thing or almost achieve the same result as this one, but this one is the most precise one. I trust this one. Okay, if you go on ghosttraders.co.za and then you come here on tools, you can see the different tools that we have, okay. So let's start with the Forex margin calculator. But before we start with that one, let's come to the economic calendar, okay? So I just want to digress a little bit because I believe this one is also important when it comes to risk management, so that you know when to avoid trading or when to trade with caution, okay? So if you look at this economic calendar here, it's already modified or already filtered to only show high impact news, okay. So news that are most likely to have an impact on the market. So that's what you need to focus on, okay. So you can see here today, it just what time is it now? Okay, we are left with around 38 minutes before we get to have this event, okay. So you can see it has high impact, okay. So there is gonna be a lot of volatility and a lot of manipulation. So at this time you don't want to find yourself trading, or if you are stubborn, you want to continue to trade, it's fine. Just trade with caution. So you can come here and filter. Okay, so let's say you are trading USD pair only. Okay, so you can just come here, you get to remove the others. Japan, so this one, European Union, the Philippines, you get to, you just do your customization. Okay, and then you focus on the countries that you need to focus on. So I believe this one is okay. So you can see here it's only these few countries that are showing up. So you can just play around with the filter here. So this one, it's very important in terms of knowing when to get out of the market or to avoid trading, because there is a lot of manipulation here. Don't even try to predict this thing. It's highly manipulated. So is the pip value calculate. Okay, so you can choose your trading account based currency. Okay, so you can see here it's by default it's on the Australian US dollar, and then you can see by default it's Euro USD, and then you can just click on calculate, and then it will give you the amount. Okay, the amount of the pip value per one lot size. Okay, so the amount of the pip value for Euro USD one lot size at the moment. Okay, so that's what you're gonna get. So but if we go to USD, that's gonna be, let's change it to USD, and then that's gonna be 10 US dollar. Okay, it's gonna be 10 US dollar. So you can change the currency pairs here. Different currency pairs have different pip value. So this is the tool here. So it's very simple. You just put in whatever you need to put in. And then also we have the Forex compounding calculate. Okay, so a lot of traders, whenever they think about Forex, they think about short-term gains and stuff like that. But if you think about this thing in a compounding way, let's take you target 5% per month. Let's take your balance is that 10,000 US dollar that we're looking at. Then the number of periods, let's do monthly. Okay, so let's push our target to monthly. Let's say for 12 months. Okay, what you are doing, because for a Forex account to compound, you need not to withdraw your profit. Okay, so let's say every month you are averaging let's just say 3.5%. Let's not say 5%, let's just say 3.5%. Okay, so you are making this 3.5% every month for 12 months, and this is the initial balance. Okay, so when you calculate here, it can give you the value of how much you're going to be having at the end of the year. Okay, so if you are that good that you can reach 6%, then your money will increase accordingly. So you can see the future of thinking long term and applying right risk management. So this is the compounding calculator tool. I believe this tool it's gonna help you a lot, so you can use it. Make sure you put this on your bookmark. Okay, so and then we have the drawdown calculator, and then we have the lot size calculator, and then we have the Forex profit calculator. So these are simple tools. You just put in what you need to put in, and then boom, it gives you the result. Okay, so just familiarize yourself with these tools. They're gonna help you a lot in mastering your risk management approach. Okay, so I believe I don't have to make this video too long, because this is basic. You just come here, you put your thing based on your account, and then you just click on calculate, and then it's gonna calculate for you. So we don't need to make this video too long doing that. Okay, so that's it for this video. But before I go, let me come to the block here. So if you come to this block here and then we search risk management, okay, you can see we have this guide here. You can look at this guide here, and then we also have this great article here, okay, it says growing small trading accounts. So it also focuses a lot on risk management. So you can just have a look at these two articles. I'll make sure that I put the links on the description of the video. Shalom.